Hi guys, it's Mark Maines here with the Realty Firm, and I'm sitting here with Bruce Smith from Centum Mortgage Group. Bruce, today I want to talk about one of my buyers got turned down from the bank. Are they out of luck? Do they have options? Can you really talk about that?
Well, that's a great question, Mark, and first of all, thank you for having me. Actually, if you're turned down by your bank, you're not out of luck. Actually, we have 4 different classifications of lenders. Your traditional bank is what we typically call an A lender. So they will lend to people that have good credit, steady employment, good down payment, etc. If you fail to qualify with a traditional lender, then we would send you to what's called an alternative lender, or what's called a B lender. In that case, they have a slightly bigger box. They may allow for poor credit. They may allow your income to be not through traditional sources. So there are solutions there. Let's say we can't qualify you with an alternative lender. Then we would go to what's called an institutional private lender. Again, they would have a slightly bigger box. They would consider, if you had mortgage arrears, if you had CAR arrears, if you had, again, poor credit, insufficient income, they would look at a lot more cases. And finally, if we failed there, we'd send you to what's called a traditional private lender. That would be an individual that would live in your local town, and they would lend you money based on sort of a common sense approach. They're less likely to be concerned about your income or your credit. They're only concerned about how much down payment you're going to put into a house or the equity currently in your house. So to answer your question, Mark, you're not out of luck. There's always options out there for people.
Okay, so Bruce, you talk about private lending. Now, the perception out there is people are going to pay an arm and a leg. They're going to pay 10, 15, 20% on interest. Can you touch on that? Is that always true? Is there a lot more competition so that it lowers the interest rate? How does that work?
Well, it's all, Mark, basically based on risk assessment. So private lenders are going to charge higher rates, and it's based on the perceived risk. So each individual deal, it's not like going to a bank where they have a posted rate. Each deal is priced individually, and it's all based on risk assessment. So could your interest rates be 8%, 12%, 15%? It could be 6%. So it really depends on the individual lender, what they're looking for in terms of the return on their money and how they view the risk of the deal.
Okay. This has been another installment of the Money Minute. Feel free to call Bruce at 519-649-2502 or myself at 226-700-5190. If you have any questions or would like any clarification, have a wonderful day.